Ajay Bagga is now joining us on the phone line. Ajay, good morning. It's been a while since we spoke to you. In terms of demonetization, what is your initial assessment? Would you wait for data to come out in the month of Jan or probably April? Corporate profitability will give us a better impact of how things are going?
Yeah, definitely, Pankaj, there is a big impact. We have seen the services PMI contracting already. On the ground assessment is there is a stalling of the economy. Overall, the big corporates are not as much impacted on the manufacturing side, but the distribution chains are impacted. And definitely the entire SME segment is very strained for liquidity. It's having a very big impact on the economy. I think you will see much worse auto numbers for December. The November numbers were really overshadowed by advance bookings, by pre-dated billing post the November 8th announcement that happened largely in the rural areas. But December, you could see a much more precipitous fall in the automobile numbers, and that will be a leading indicator for the stalling of the economy.
Right. In terms of, what happens to the economy, whether it's a puncture effect or it's a slightly long-lasting effect, that is something which is anybody's guess and very difficult to take a call now?
Yeah, definitely. I think, what will happen is, suppose, the FMCG type of consumption that you could have done, or the vacation season, or the spending on marriages, that's a one-time event that goes off. You cannot replace it. That's why the services really show up immediately, and the service has shown you a 46 on the PMI, which is quite dramatic for an economy of India's size to so quickly see a service fall to a 46 PMI. So overall, what I would say is that postponable demand will come back. So it's not a destruction of aggregate demand. There will be an impact on inflation because that much less currency in circulation will be very deflationary. That's a welcome move. That will allow RBI to cut rates more. That will bring down the yield curve quite substantially. But this liquidity was lubricating the economy, and you don't have parallel networks available right now. It will take about a year for those kind of parallel networks and the kind of training, reskilling that has to happen to people, because we are leapfrogging from a cash economy straight into a digital economy, not even into checks, paper, as the West has evolved. So you're just going across two scales and straight away landing into a digital economy, which will take time for people. Good thing is with the Jan Dhan, with the Aadhaar, and with mobile, so what the government calls JAM, there is a lot of alternatives available, but it will take a year to really percolate down. Right now, I talked to quite a few banking correspondent companies. What they are saying is one banking correspondent with 50,000 rupees is servicing 2 to 3 villages. And it's just not adequate. The liquidity is not reaching the entire economy. And the kind of liquidity that has got sucked out is not being replaced at all. So short term, it's a very dramatic measure. It will have a drastic impact on the economy.
Right. In terms of December numbers being weak or probably even March numbers being weak, that's what the street is factoring in the last few days, or it's got to do with the strength of dollar index and what's going to happen in the Fed meet?
I think it's more, it's a combination, I would say, Pankaj. The Trump effect has been there on the emerging market equities. So there has been a scale back from emerging markets back to developed markets. That's what the flows are showing. Out of bonds into developed market stocks. But we have faced much higher redemptions than the rest of the world. Of course, we used to get also a higher share. But the kind of 17,000 crores of redemptions that's happened in November, more to do, I think, with the demonetization impact and the forecast that earnings will suffer in the short term at least. I think it's a 2 quarters issue. At the least, is what best we can make out. Market is factoring it in. You have seen the interest rate sensitive sectors getting hammered quite badly, 10 to 20% kind of cuts in NBFCs, MFIs, housing finance, auto ancillary companies. So we have seen that impact coming through quite immediately. So market is discounting at least 2 quarters of pain, Pankaj.